Good evening and welcome to our weekly US markets review brought to you by SG Futures. It is currently Sunday the 8th of November, just gone 8 o'clock in the evening. And what can we say? That was quite an interesting week in trading. What we're going to cover off in our weekly review is we're going to take a look at where things from a daily perspective on the E-mini S&P. We'll take a look at our weekly market profile, a daily market profile, and show you a couple of setups which played out really well for us last week. But what we're looking at right in front of us here is our daily candlestick chart, and this reflects only the cash session hours. What we're going to do is just quickly mark off our entire week, so we can see what we're looking at. And these are the 5 sessions over the course of last week that we're going to be focusing on today. So we have Monday, Tuesday, Wednesday, Thursday, Friday. So what we spoke about last week, that we couldn't really give a call one way or the other as to how this week would play out, and I think as the week wore on, we just became more and more bullish following the US election outcome. But we mentioned last week that we marked out this level in here, which was 32.47, which we said was quite important, as this was the yearly open. So this is where the E-mini S&P opened on the 1st of January, the first trading day in January of this year. And this is a really important level because when you think about hedge fund managers and pension fund managers, we're now roughly 60 days out from the end of the calendar year, and they want to be able to say that they are up on the year. And trading below this level is significant because you're effectively saying there's a good chance that your fund is down on the year. So this is why this level down here was important. We mentioned, let me just remove this box here, but this candle from last Friday, which is Friday the 30th of October, the last day in October, it opened above this 32.47, explored below, but closed up much higher inside the value of this 2-day balance area. And we said that that was significant, and if there wasn't a US general election on the horizon, that we could probably have made some plays around this. And the plays around this would have been much more bullish leaning than we may have been when we came in on Monday. So on Monday was the day that we would expect it to be. That is this doji candle in here. We opened in the middle, explored lower, explored higher, and closed around about the middle, which is kind of what you'd expect in the day before everybody in the US going to the polls. What was interesting on Tuesday is that this was the day of the actual vote in here, is that we opened down here, we explored a little lower into the previous Thursday's range, we rejected, looked up higher into the early part of last week's balance area, and then closed down near the lows, which kind of shows you that there's no one really willing to make any commitment, either long or short, given what was on the horizon, a general election. So people are a bit risk averse, and there's probably some cash on the sidelines. And then overnight on Tuesday night, it really wasn't the sort of fireworks display we thought it would be. In fact, I didn't take it. I don't think I took a single trade that night, and I think I went to bed at about 2 o'clock in the morning to sort of save myself for the next day. And a US election would be something that we would have typically stayed up and tried to trade, and I only really saw the potential in getting chopped up. So we walked away and came back at the cash session the next day. And what was really interesting is that despite there being an enormous amount of uncertainty, like even on Sunday evening here, yes, all the news networks have called the president that Joe Biden has won. It's still not official, and there's still the chance that Trump drags this through the courts. It drags on for another 4 to 6 weeks, and God only knows what happens during that period. So there still is a little bit of risk attached to that, but I think the market is telling us all we need to know about how much it considers that. And when we came in on Wednesday, we could really take the lead from the European session. There was a real risk-on tone across Europe, and this really followed through into the cash session on Wednesday. And the cash session on Wednesday was really strong. That's this candle in here. We opened, we explored down below, down towards the 20-day moving average. We shot higher, and then we closed sort of in the middle area of value. And then Thursday and Friday were both significantly bullish days. And I'm going to get into one of the nuances that we've looked at on Thursday. We got very, very overextended. And this was probably led by some of the rally within NASDAQ. And we called it on Twitter that we thought on Thursday that we'd probably topped out in the short term. When we say the short term, we really mean, the next few days, when we maybe get into the middle half of this week, we might have another go at all-time highs. But when we say the short term, we mean a couple of days of a horizon. And coming in on Friday, we were really of the view that we might be trying to short things, maybe try and ride the wave of people who've been long on Wednesday, getting out before the weekend, perhaps. And we've marked out this level that we think is really important, and this is Thursday's close, and it also corresponds with a trend line. So we've marked out this area, 35.12.50, and what's really, really interesting is the corresponding chart on the NASDAQ on this particular pattern that's unfolding here is we have the previous all-time high, which is up here at, 35.85, and then we have the most recent high in here, which is 35.42, and we've drawn a trend line. And this trend line, we had it in place last week, and we've only noticed the relevance of this on Thursday, in that we traded up above it and we closed dead on the nose at 35.12.50. And this is an indication that this trend line is potentially valid. So we've marked off this level, and we mentioned this on Twitter all last week, that 35.13 would be a price that the market may struggle to get above in the short term. And it was possible to take a couple of shorts, and you would have had a couple of attempts at this at the sort of 35.10 to 35.12 mark to get short, and they would have paid you. So there was a couple of potential trade setups that we looked at over the course of last week. Now the corresponding chart on NASDAQ, and we're going to come back to this in just a second, but if we look at this on from a NASDAQ point of view, we will note that, granted, it's a little bit more crudely drawn, but the Thursday and Friday candles have closed above this. So this is what this tells us as we come into this week, depending on how the futures open this evening, that if we get any sort of bullish momentum, that this could potentially be an area for us to pivot off from an ES point of view. So the NASDAQ has already broken higher, and we should expect the ES to follow. So our plan coming in next week, and this kind of the unfortunate thing is this may happen during a Globex session, so we'll need to have our sort of finger on the pulse a little bit. And kind of what we're expecting is, maybe we open down here, we trade up here, we trade maybe back down here overnight, and then we might get the break in the pre-market. And what we would then look to do is buy a retest. So getting long at this sort of area down here. So I'll just mark that off there. So trying to get long in that particular area in there. And what we could then do is put our stop in below the trend line. And that could potentially be a nice trade which might work out, because the general feeling is right now is that we're more than likely headed towards all-time highs. So it's really only a matter of time before we break this particular level up here, 35.88, and head into the 3600s. And as we come into this week, that's how we're leaning from a bullish point of view. We're leaning more towards a bullish point of view as we come into this week. So that's, from a candlestick point of view, how we see some potential trades playing out this week. Of course, if we, on the other side of this, if we trade up here and then we break lower, we might see the 20-day moving average as support in the short term, but then we run the risk of trading back down here again, and then you might have another trend line down here which may act as support. We don't know, but that could be another potential to get long if it goes that way. Really, if we don't get confirmation of a candle closing above here in a hourly time frame, we won't buy the retest down here. Like I said, this will probably happen during the Globex overnight session. I think just trading the they just trade in the ES during the cash market hours has become quite difficult. So these type of levels play out quite nicely on a market that's pretty much open 24 hours a day. So let's have a quick look at our weekly profile view. So this is in this box over here. This is our, in this box over here, this is our last week's profile. You can see it's quite a big one. We've got a couple of gaps in the middle. There's some, if this was an ordinary week, we'd say this is some really ugly structure. But given how the week is played out, I think it's perfectly acceptable to have these sort of gaps and breaks higher, because the trade was quite volatile. What's interesting as we potentially break towards all-time highs is that we closed in the very top end of value for the week, which tells us there's potential for us to take this higher and maybe clean up some of this structure over here from the all-time highs. The NASDAQ has done that already, so that is something that we may look towards this week. Failing that, if we do break to the downside, I've marked out these two boxes in here. I've marked out these two boxes in here as they are gaps in the profile, and they are areas which, if we see some downside momentum, this is where we potentially see getting filled out over the course of the week. And how I think that might look would be maybe here down to here. Sorry, there's a lot of boxes on the screen here, but this sort of shaded area in here, let's fill it so you can see it. This sort of shaded area in here, maybe where we spend a little bit of the week if we get any sort of bad news or anything that takes us lower. But for the most part, when we look at this on a weekly point of view, from a weekly profile point of view, given despite the fact that we have these little gaps in the weekly profile here, these prices are well auctioned, and it would support a move higher from a market profile theory point of view. So that's again something we carry forward into next week. When we just have a quick glimpse of the daily profile, again, we have our yearly open marked down here at the 32.47 level, and we can see here how the week has gone. We have our Monday, which is pretty much a balancing day, which was in balance from the Wednesday and Thursday of the previous week, which was a two-day balance zone. We closed in value. We have overlapping value between those Wednesday and Thursday the previous week and the Monday of last week. And then we had the value break on Tuesday, but then we closed down in and around the lows and below this two-day balance, which again is to be expected given the risk tone. Given the risk tone on the eve of a general election result. And then on the Wednesday we had this big elongated profile, which tells us an awful lot. It tells us there was probably a lot of short-term money in the market here, because we explored higher, but then we closed down here, which tells us that there was probably might have been some weak hands. When I say weak hands, I mean people who are in and out in a daily time frame, as we closed just about in value for the day. And then we had the value break higher on Thursday and overlapping value on Friday. So we would hope to see, from a bullish point of view, is this two-day balance, perhaps maybe see some continuation, and then our key level that we marked out at the 35.12.50 or 35.13 we'll call it. We would expect to see some sort of a break higher, and maybe we'll buy a retest, or we fail above, break lower, and then maybe start to fill out this area. I'm marking off here at this sort of area down here in the early half of the week. So that's what things look like from a daily point of view. What we will just have a quick look at is just look at the daily profile chart, and this is our sort of bread and butter that we trade every day when we're trading the markets. And we're going to have a little look at what our thoughts were on Friday. And I mentioned on Twitter that this was a trade we often take. So that there was a pretty good setup, and it's one that if you've ever taken Jim Dalton's market profile course, this is one that a similar trade that he talks about. So what we have over here is the Thursday. This is the Thursday profile. I've just highlighted it there, but I'm going to erase that. That's the Thursday profile, and I mentioned that we closed inside a value on Thursday above the fairest price to do business, so above the VPOC. And in the overnight session, you can see that when the futures opened at 11 p.m. GMT, we gapped a little bit lower and we sold off. And there was a little bit of risk off in Europe in the early part of the European cash session, and this really came off. So we were looking at, at one stage we had like a 50-60 handle gap from Thursday, and we were down into Wednesday's range down here. So we see here at one stage we were 50-60 handles down, and O period tags the VPOC from Wednesday, which is, it's crazy when sometimes these levels pop up on the mini S&P and how technical they are and how mechanical this market actually is. Again, this told us overnight who was in the market, so this is there's probably a lot of algos in there that, like, you'll often have algos who'll just buy that without looking. And then in P period, I thought this was going to come off quite a bit in P period because there was a real risk off tone in Europe, and then it just turned on a sixpence and went straight back up again. And how we opened, which was really, really interesting, is we opened with like a 13 handle gap to the downside, which at one stage was 50 or 60 handles, and we were opening inside the value area low from Thursday. And we actually explored into the value area from Thursday as well, which is really, really interesting. And that starts to tell us how the day is going to set up when we start to see how the pre-market is shaping up. Now, granted, we had non-farm payrolls now before the cash open on Friday, and this is W period here, and it was a really, really positive result. And we got back into the value area low. In W period, we explored into Thursday's value area. In X period, we took it above the Thursday's VPOC and right up into the value area high, which is a really, really bullish sentiment. And that changed completely how we were going to treat the cash open. And we really felt it would come off, and probably come off quite hard, but it changed the narrative a little bit. And it was really, we wanted to wait for the opening prints in Friday's profile over here in the cash session before really making a decision on what we would do. So one of the areas we do want to mark off is when the cash market opened, which was here at 34.99.25. We opened, we had a little bit of a look higher, and we tagged the value area high of Globex, which I think is, again, just shows you how mechanical this market actually is and how technical it is. And that tells us immediately there's weak hands in the room. This is all short-term traders pretty much in the room today. And the market then came off. So we explored, 2 handles higher above, what is a key milestone level, 3,500. So explored a little bit higher, but that high was weak, and it came off. And when we see this type of trade and we trade back through the open, so if we initially explore higher and then we trade back through the open, you've got a much higher probability that if price comes back towards the open again, you sell that a tick in front of the open and you go short. And it's got a really, really high probability outcome. And in this case, I sold 34.99 and I put my stop a tick inside Thursday's value area, which was 35.0275. And B period never got there, and I think I got about 8 or 9 handles out of this. I had a tick in front of Wednesday's high was where I got out, and that was where I thought, from a mechanical point of view, I could see that this market is very, very technical. It's trading to technical levels, which tells me there are short-term traders in the room. And in B period, I'm going to mark it off just here, in the low of B period, they front ran Wednesday's high by 1 tick. So it was in this particular area in B period that I got out. And that's a trade that you'd see a lot of people take. And that's one that if you see it set up like that, I'm not saying it works every time, but it's one that when you see the market open, explore higher, and then reverse back through the open. We covered this a lot during our market profile education series, the level up sessions. That when you see a trade back through the open, that's a short-term bearish signal, and if it comes back up here, you can stick your order in, tick in front of the open, and stick a couple of handles either side to allow for. I would have usually only done about a handle and a half, but I didn't like the 3,500 level, the big round number, and I thought this might actually explore higher, so I extended the stop out to 35.0275 was where I had to stop, and in fairness, it never got there. So another way of playing that would be to put the stop above the high of A period, but for me that was a little bit too much risk. You're talking 4 handles for what would end up being a 2-to-1 risk ratio, which for me probably wouldn't be enough. But anyway, that's just one that's how it's set up, and it played out pretty nicely. One of the other trades we did talk about was the approach to 35.13, which we said was a really important level, or 35.12 was a really important level, which was Thursday's close, and there were a couple of opportunities you could have got to sell this, and it was in and around the overnight high. There was definitely the potential to, given that we know who's going to be in the market, that it's technical traders, levels are going to be front run. We stuck an order in here at 35.0925 and sold the market there. And the idea was put your stop above Thursday's VPOC. And the idea is that if it breaks above this level, your trade is invalidated anyway, because we believe this level to be so important based on what we've shown in the early part of this video. So these are a couple of trades that we got off on Friday that really rounded off quite a nice week from a trading perspective. Whilst the week wasn't as volatile as we thought it would be, we believe the market has passed a major milestone in that the E-mini S&P and the NASDAQ have passed the levels from the coronavirus sell-off, and they've gotten through what is probably the biggest risk event in the last couple of years that's been on the horizon, which is the US presidential election, and we've come out the other side of it unscathed. There is some potential risk on the horizon, I believe, depending on how, when President Biden is properly elected, what the reaction is from a lockdowns perspective. And I think it's worthwhile keeping an eye on the Russell 2000, which is over here. And we're not going to get into this market in too much detail, but this is it's an index of 2,000 smaller cap stocks, and these are your small and medium businesses dotted across America, and they're the ones that would be deemed to be significantly impacted in the event of another lockdown. So this one we kind of watch with interest as we run into the calendar year end. But from a traditional timing point of view, it is expected that from the sort of mid to late November on, that we see a rally right through into Christmas. I think there's really only been 1 year, maybe in the last 5 or 6, where it hasn't rallied hard into the end of the year, and it was very much an outlier. So coming into this week, we're very much leaning to the bullish side of the house. And we've outlined a couple of trades that we would take if and when we get the breaks above or below those sort of key levels this week. Once again, thanks again for joining us. As always, if you want to learn more about market profile, visit our website, sgfutures.com, and we wish you happy trading and good luck.